Welcome back, folks. This is part 3 of a continuing 4-part series, which I titled Ends. Alright, just as a brief overview, this is the 3rd installment, and last episode we talked about the solution. This one is going to be the plan, determining the starting point, attacking one financial end, and casting forth a vision. Now, obviously, we talked about the problem being most people don't have enough income. Their living expenses, some of them live above their means through lifestyle, but meeting those ends with the living expenses, that's the heart of this series. We talked about the solution, having multiple streams of income. And I had you sit down and list out all of your monthly ends, the bills that you have to make every single month, and how much that is. And then try to come up with a list of things, hopefully, you can trim away that are not essential. Okay, things like streaming services and such, they add up. And you'd be surprised how many of those things do, in fact, bleed out the monthly income, and that your surplus income becomes inadequate. It's insufficient. It's not enough. So it makes the task of making ends meet harder. So now in this list here, your end that you settled in on, that you're going to be targeting as the lowest one, may be different from the one I'm going to choose for this example. But for my example and for this teaching, we're focusing in on food. Okay, so that will be essentially the grocery bill for the month. Now, I talked to a lot of traders through Twitter. I asked a lot of questions that would help me get a baseline for median income. Now, I use the United States as a baseline. These figures won't always line up with where you are globally. And again, it's just an idea, okay? I'm using this one because I think it's most important right now, because food is essential. You need it to live. You need to feed your family and yourself. But the costs of food, that's what we're going to use as our target objective each month for our case study. The plan. We will focus on an approach and plan of action that can harvest the monthly ends and cost of groceries. The budgeted cost per month is $1,000 pre-taxed. So in other words, assuming you were able to do this every single month the entire year, that would be a gross income of $1,000 times 12, or $12,000. Obviously, that amount of money would be taxed. We're not using that end net result, but we're looking for this as a plan of action to work towards using as a initial objective to grow from. Obviously, we're not going to stay with just $1,000, but the first couple months, to overcome the adversities and uncertainties of trading and the fear that comes along with not living up to expectations. What expectations is that? The one that you arrive at by looking at social media and the frauds and the scammers that pretend that they make $500,000 in a week, okay, trading their demo account or their rented MT4 servers with their bogus brokers offshore that allows them to use these fake things to entice you. That's not what this channel's about. That's not the type of mentor I am. I'm giving you where the rubber meets the road approach, where you've learned how to trade, you've learned how to look for a repeating phenomenon in price action. I've given you a specific model, and that model on the 2022 mentorship on this YouTube channel, that ICT model, is the basis of this very series, and how to take it and apply it to your personal life. This is just a suggestion. Instead of groceries, my son Caleb, he's using that $1,000 as a car expense each month. So he's going in to try to build up the idea of starting here and then working towards adding a utility bill and then adding car insurance and then gas consumption each month and then some kind of rental or mortgage payment that would be associated with a monthly payment. So he's going to be working with about anywhere between $3,600 to $3,900 per month. So that'll be his personal expenses. That's what he's going to try to work towards, having a model that grows with that, with a separate account. Now, obviously, the model he uses can do better than that. Okay, but for the sake of building multiple streams of income and having one account do one function, which is make ends meet, the account is not designed or intended to double every month or quadruple over 6 months. It's meant to just harvest the amount of money that would be associated with the monthly expenses or a partial of those monthly expenses. So that way it helps alleviate the pressures, the stresses of trading the accounts that you're really trying to grow. You're not going to be enticed or pressured into trying to trade them more frequently because ends are being met. And by doing that, it gives him a means of eventually, should he decide to do so, and he's mentioned this before, creating a YouTube channel where he comes out here and he does his own thing, shares his results, shares his trading, shares, whatever experiences he's had either coming up under me as his father and or his teacher in trading. We will focus on 4 opportunities per month. Intraday index trading as a case study for this example. So we're going to be only focusing on stock index futures. Now, you can make this Forex if that's where you're at. If you're not trying to do index futures trading, that's okay. But I'm giving you my case study. This is for, again, my son, Caleb. So you're kind of like looking over our shoulder. So these are the discussions I'm having with him in private, but I'm sharing it in a way where, so that way everything's in record for my other children. They can use this, and my grandchildren, should they find an interest in trading, they can use this as a means of a baseline. We will assume clearing is done with a discount broker with $4 commission cost per trade. I'm not going to tell you the broker, but you've heard me mention them in passing. We will assume the account size is $25,000 to begin with. Now, right away, some of you are thinking, okay, hold up. This is about making ends meet. How am I going to get $25,000 when I can't even make ends meet? Well, there's a pathway that's growing in popularity right now, and that popularity is swirling around funded accounts and prop firm accounts. Now, I have zero experience with them. I've never done them. My son hasn't done any of them either, but there are several companies out there that I'm trying not to represent. I had a few of them reach out to me to do like a, can we advertise to your channel type thing, and I'm not doing that, okay? So there are some that are very popular. Some of them my students have gone through, and one of them recently did very well for himself. I'm going to leave that decision up to you, okay? You can talk to everyone in the community. My students are using a few of them. And on Twitter, I'm sure if you ask around through the replies, the tweets that I put out, just ask around. And folks that are doing it, and if they're doing it with any particular company, I'm sure they will share with you their experiences, both good or bad. But the $25,000 is assuming that you have gone that route or you have that much money to trade with. Okay, so you've worked up enough money selling things around the house, yard sales a whole year, part-time jobs, sold the extra car that it isn't going to be used, anymore. You did whatever you could to scrape up $25,000, or in conjunction with that, or in addition to that, or entirely of the results of a funded account withdrawal or withdrawals equating to $25,000. Okay. Now, you can obviously just use this idea with the funded account itself between $20,000 and $50,000 account, and that's fine. That's one way of doing this. You're bringing your own unique personality and your present position. So that way I'm not pressing everybody into the same mold, because it won't work like that, folks. Mentoring is not done efficiently by doing it that way. I have to give you ideas to kind of like say, okay, well, that doesn't really match up to me, but here's something I'm going to do. And some of you hang on every word I say. And if I don't say something or give like a nod to it and saying, okay, that's a possibility, or that's another way of doing it, you feel like you have to email me, which I'm never going to get to your emails. I have too many of them that I can't catch up with them. But I want you all to think about how you can take these ideas, and it doesn't have to be 25,000. It could be 20,000, or it could be 15,000, and you use micros, okay, or less than 10,000 and do micros instead of a mini. So all these things that I'm going to talk about here, you can make that uniquely your approach based on what you're starting with in terms of capital, how you got that capital, whether it's entirely through a funded account, or if it's after withdrawals from funded accounts resulting in profits, then building up to that $25,000. The idea is you want to have a $25,000 account. I think that's a fair amount to do what I'm suggesting in this series, which is trying to make ends meet, and it won't feel like you have to do too much to get it. The overview. Again, the monthly goal is $1,000 US. We will trade one ES mini contract, as mini S&P futures, per trade. So one contract, that's it, not multiple. You're just doing one. We will trade with an objective of 5.25 points, or 21 ticks per trade. We will trade with a hard stop loss of 4 points. This is static for all trades. You're not making it smaller, you're not making it bigger. It will always be 4 points for every single trade, or 16 ticks. So stop loss is 16 ticks, take profits always 21 ticks every trade. We will close the full position at 5.25 points, or 21 ticks per trade. We will never take partials. So it removes all the uncertainty. When do I take partials? Should I take partials here? Don't worry about that. We will trade the AM and PM session in index futures, trading regular hours. The AM session is going to be limited to 9:30 in the morning to 11:30 in the morning, New York local time. So it's a 2-hour window. That's it. Specifically these 2 hours for the morning session. The PM session is 1:30 in the afternoon to 3:30 in the afternoon, New York local time. Can't take a trade before, can't take a trade after these specific windows. Very, very specific, very concise. You have a 4-hour window broken over 2 sessions in the same trading day. If you can't find your 5.25 points there, you're done. Move to the next opportunity. The model. We will focus on buys only when we believe the weekly candle will draw to a premium array. That means we're expecting that weekly candle to expand higher. It's reaching for some old high, some fair value gap, or bear shoulder block. Not that the bear shoulder block would be a sell short opportunity. It just means that is a draw on liquidity. Something that's leading price to go higher. Doesn't need to close above the opening on that weekly candle. It just means that we're expecting volatility to expand predominantly to the upside, seen on the weekly candle. So that means we have potential for volatility and range expansion to the upside. So we are going to focus on buys only in that instance. We will look for medium or high impact news drivers on the Econo Day calendar to narrow our focus. So what we're looking for, Monday through Friday for the coming week. Over the weekend, we're doing this now. So Saturday or Sunday, whatever day you do your analysis, you're going to be looking for all the days to have a medium or high impact news event, some kind of report that comes out. If it's going to come out in the morning session, which is predominantly where they're usually found, unless it's an afternoon FOMC rate announcement type thing, they're generally going to be limited to the morning session. So medium or high impact news drivers, focusing on one event, morning or afternoon. Now, if I were to tell you which one should you focus primarily on, look for the medium or high impact news events in the morning. The ones that occur in the afternoon are going to be very volatile sometimes because they're going to be related to interest rate announcement or FOMC or a Fed chairman announcement, something to that effect. And it creates a whole lot of volatility. So the 4-point stop loss might become a factor in the PM sessions. In the morning sessions, it's a little bit more forgiving, a little bit better in terms of the volatility, because especially after 9:30, if we wait for the things we're going to be looking for, it's usually a little bit more cleaner. We will stalk setups for longs on calendar days and after the time the news on that day hits the market. So we're not trying to be ahead of the marketplace with the news event. We're not trying to predict the reaction in the news. We're waiting for the news to hit the marketplace. Then we start hunting a setup. We will wait for sell side liquidity on a 5-minute time frame to be taken, then displacement higher in price. So all of this is essentially the ICT 2022 mentorship model that's on my YouTube channel you're watching right now. That model is what we're focusing on. So I'm not reinventing the wheel. Okay, I'm just doing the same thing. We're just making it very short and sweet to 5.25 points is our objective. That's it. It takes away all the idea of worrying about where do I get out? You get out at 5.25 points. That's it. It's very simple. You're risking 4 points. That's it. Nothing else. You're not moving your stop loss. Once you place it, you leave it there. You're not taking partials. It's simple. You see how no-brainer this is? It's very, very simple. It's to make ends meet. Nothing more, no acrobatics. It's as bare bones as you can get it. We will hunt a fair value gap on the displacement price leg for our entry point and using a limit order on the fair value gap's high. So in other words, where the fair value gap forms on the 5-minute chart, that high price that is the top of the fair value gap, that's exactly where we're going to place our buy limit order. We will use a time frame that permits the 4-point stop loss, or we let the trade pass, no exceptions. What does that mean? Well, you're familiar with the ICT Mentorship YouTube model, where we go from the 5-minute chart. Once we see a fair value gap, we can actually reduce it down to smaller time frames and find a fair value gap that's on a smaller time frame, and then that 4-point stop loss can be utilized on that lower time frame chart. So it's a matter of going down from 5, 4, 3, 2, and 1, but finding the one that allows you to have the 4-point stop loss. That's what you're going to use. So it helps you reduce your focus to the one time frame that you're going to focus on, using the 4-point stop loss, targeting a 5.25 point exit. We will place a limit order at 5.25 points to exit. That limit order will be a sell limit order, which will cover the commissions and net our 5-point goal per trade. We never chase price after it runs from a fair value gap. We failed to engage, no exceptions. That means if we've been hunting a setup and it trades at the fair value gap, but you didn't get your limit order in time, or it doesn't really go to your limit order and fill you, and it runs away without you, if it's staying real close to the fair value gap, we still will not engage. It has to enter right how we are looking for based on these rules, or we let it pass, no exceptions. The reason why I'm including that rule here is because you're going to probably be panicked. And panic or fear of missing out is going to make you act impulsively. And you're going to do something that's going to prevent a 4-point stop loss. And you'll incur more movement because you probably won't want to put the 4-point stop loss on. Or if you do put it on, it's going to run right to it, stop you out, and then you'll regret it because your poor placement of not sticking to the rules and letting the limit order take you in. Or if it doesn't give you that, let it pass. These things repeat enough to know that you only need to find one of these per week. That's it. Theoretically, we should hunt only one 5-point setup per week, harvest that, and stop trading for the week. If we harvest one 5-point setup per week at 4 weeks per month, we will, in theory, net 1,000 US dollars. Everything that's stated here and in the previous slides reverse these rules for periods when we expect the weekly candle will likely draw to a discount array, or in other words, expand lower in bearish conditions. So everything here, every rule here would be reversed. So that way I don't have to go through this explanation here with just reversed terms. So obviously, this is a very, very stripped down version of what was taught on the 2022 mentorship model, because that model, it's usually shooting for more than 5.25 points. Okay. This is just to get you in the trenches, making ends meet. Rules are very simple. There's not a lot of moving parts. There's not a lot of things to trip yourself up and worry about. Partials, when I move my stop loss, blah, blah. It's simple. They're all very specific things. Now, if you're trading with a $25,000 account that you've either obtained through funded prop firm, or if you've taken money out from prop firm account trading and you've grown it to $25,000, notice that to make 5.25 points after commissions and such, that's a $250 net. So if you're getting 4 of them, that's $1,000 a month. If you take a 4-point stop, you know, you get banged for that, you're not taking a very large loss. And if you're aiming for that $250 after commissions per week, you're really aiming for what? 1% a week. So that's 4% a month. 4% a month is not Olympic level type feats. It's rather easy to do this. Now, if you are brand new to my channel and you just started watching videos and you've never done any back testing, you've never studied the model I've taught on the 2022 mentorship, this is not going to be easy for you. This is entirely meant for individuals that have gone through the mentorship, they've back tested, they forward tested, and they've been profitable on a demo account for about a few months. You know, what's a few months? 4 to 6 months. Well, I want to go in there faster. You're looking to lose money. If that's what you want to do, you are rushing, you're not ready, you're going to lose, and you're going to assume because you didn't make it work faster than it should have been utilized that these things don't work. That's not true. That's flawed logic. This model is not meant to beat Robin's Cup trading, okay? It's not meant to trade better than the next guy, okay? It's not meant to be weighed in the balance against someone else's course or their study approach to using market replay, okay? It's meant to go into the marketplace starting with the brass tacks. You've now entered live trading for the first time. How do you make this work for you? This is one approach to doing it. It's not the only approach. This is my suggestion to my son. This is my fatherly advice to him to go in using these ideas so that way he can formulate a plan to have one stream of income that just meets his monthly goals. And his other accounts, they'll be used to grow, and or if he wants to do a competition account, you know, whenever he decides to do one, if he should ever do so, that would be another account. But it would be unique rules and expectations for these accounts individually. Not one account does everything. That's foolish. Each one of these accounts that you ever create, you treat them like a storefront. That storefront, if it sells shoes, it doesn't sell pizza. Okay? It doesn't sell ice cream. It doesn't sell lingerie. As nice as that probably would sound to both men and women, that is not the ideal scenario to have all these different things. Okay? You're not trying to do a kitchen sink approach with every single account. You're trying to take the idea of limiting the account's focus on one specific endeavor. What is its primary focus? This account is going to make ends meet. It's never designed, it's absolutely never designed to multiply and grow. It's always going to be harvested every single month. The gains are met, the gains are taken out, and you reset back to the certain dollar amount that you're using all the time. So that way you're only expecting to do these very few things, and once they've been met, you stop. And as your trading grows and your experience grows, obviously there's more than one setup per week. So you can start taking these 5.25 point hauls out of the marketplace once in the morning session, once in the afternoon. So now what have you done? You've doubled it. So now you have a potential of taking $2,000 a month out. And then you start thinking, okay, well, now I have the ability to do this with $2,000 a month. What happens if I take 2 setups in the morning session and 1 setup in the afternoon session? That's 3, or potentially what? Tripling. Then you got $3,000 a month. Then getting eventually to the point where 2 sessions per day, 2 trades per session. So that's 4 setups. Because we're talking about very small, little minor movement in price action. Either you're getting it the same day or you're spreading it out across the week, because the economic calendar isn't always going to just have one day with higher medium impact news. Usually it's spread out over the week. So that way you can attack those days, both sessions, and maybe get 2 trades per session. Because, like I said, 5.25 points is not much in terms of movement, and you can get that very easily on a 1-minute chart multiple times in a day. You can ride a bullish move up. You can ride a correction after lunch. You can get a continuation in the PM session going into the close of the day. 5.25 points is very, very easy to find several times in a very nice volatility day. It doesn't have to be a big range day to do that. So it's a matter of growing over time and making this model eventually grow into never needing more than 5.25 points. You're never needing to do that. You're never needing to increase it. Okay, so this is my son's model. This is exactly what I teach my son to look for. This is all he should be trying to aim for. And his experience will dictate when he can graduate to doing more or aiming for more. Has his account had larger moves than 5.25 points? Yes. But I want him to be thinking, like, what can I do easy? Like, what's my easy, low threshold? Go into the marketplace and get this. For some of you new, you probably sat down with a calculator and said, okay, if I can just go in every single day and get just 2 points a day, that's $100 in trading the E-mini S&P. And that's true. I don't want you thinking that. You can do those types of things, but you also have to consider commission costs. They add up over time. So you don't want to be doing too many things that eat up on your bottom line. So you want to try to keep your trading not as frequent as you probably think it should be right now, and aim for very low threshold objectives. And 5.25 points in the E-mini S&P per setup, that is, in my opinion, very, very easy. And you're trying to incorporate everything I taught in the ICT mentorship model for 2022 on this YouTube channel to facilitate those ideas. The last part, it'll be me showing examples of what this would look like in chart form, execution format, all these ideas. That way you can see it in a more chart-oriented perspective. And that will complete this series. Ends. Until next time, be safe.